some people, including myself, have used a 10% down loan to purchase a short-term rental. How can
Yeah.
someone do that?
So the easiest way to do that, right, is since it's a short-term rental, it's not going to be occupied 100% of the time by a tenant.
Mhm.
And the rule with a secondary home and a second home loan is that you have to occupy the property for essentially 2 weeks,
Mhm.
right? 10 days of the year. And so as long as you are occupying that property for 10 days and the property is more than 100 miles away from your primary residence, then you can get away with doing a second home loan,
Mhm.
which only requires a down payment of 10%.
But that also
And
has
so
PMI on it, right? Or not
some
PMI, but it has.
sometimes it will have that PMI on it. Other times you can pay off the PMI up front at closing, or you can take a
Gotcha.
higher interest rate for no PMI. In a situation like yours, right?
Mhm.
And most of the time, probably an investor is looking to hack this, this workaround. Is you're going to have the ability to put down 10%, eat the PMI payments
Mhm.
for some time, but then you're also potentially going to be renovating the property, right? And
Mhm.
improving its value. And so then once you get all of the renovations completed, or once you feel that the time is right, you can get an appraisal done. And as long as you can show that you have a 20% equity margin, um, they can wipe off the PMI, remove that from your monthly payment, and you never had to pay an upfront cost to get out of the PMI, and you didn't have to take a higher interest rate to avoid the PMI. But that would be in a situation that you can hack the removal of that.
Wait, so hold on. I think this is new information for me, so this is why I'm really happy to have
Yeah,
this episode. So, for our Joshua Tree property,
yeah,
I know that we do have PMI on that, but
yep,
Joshua Tree obviously has appraised a lot since we closed on it. We've also done some work on it.
yeah.
Like, what would I need to do to get that to do that then?
We just have to get an appraisal on it. So if there's a form that you reach out to the lender,
Mhm.
it can be the lender that you originated the loan with still, because sometimes the loan will transfer servicing, but the
Gotcha.
origination of the loan will never change. So Andy
Okay.
Biegel is always connected to the origination of property 123 Main Street. Joe Smith always connected right to so you can reach out to your lender that you originally worked with
Mhm.
or the servicer of the loan.
Mhm.
I always recommend the originator because then they can actually help you. They know your situation. They should be bought into helping you achieve your goal as well from
Mhm.
a relational standpoint. But reach out to the lender. There's a one-page document that you have to complete as
Mhm.
the homeowner. It's all of the renovations that you did, the
Mhm.
cost of the renovations, and then you send that document back to the originator. The originator can then send it to the servicer and request an appraisal for PMI removal.
Hmm.
And then the servicer or the originator, depending on where the servicing is, right, will reach out to the borrower and say, hey, the appraisal cost is going to be $350. If it comes in at a value of X, we can remove your PMI. At the very minimum, if it comes in at a value of Y, but we can't remove the PMI, now we might know though that you have an 18% equity margin instead of a 10% equity margin.
Mhm.
And now you only have to pay off 2% more of your loan to get to the 20% threshold.
Gotcha.
So
Well,
we'll recalibrate that. So I'll
well,
send you
that
that
one
form when we get off the phone.
I know. Well, awesome. Well, thank you, Andy. That should be fun, because I think the
Yep.
fence alone could help a lot.
Yeah.
Because that goddamn fence is way too expensive. All right, and then back onto this second home loan. Can we use this in more than one market?
You can only hold one second home loan at a time.
Okay, per market
So
or anywhere?
anywhere as
Okay,
a borrower, right?
okay.
So Fannie, Freddie, Ginnie, right? They're only going to let you have one second home loan at a time.
Mhm.
And they do pretty diligently track those details because obviously that's where you get into the space of, is it really a second home if you got 10 of them?
Mhm.
Is it? an investment property that they're just hacking the ability to do the 10% down for 10 properties, they don't mind letting you get away with one. They got way bigger fish to fry who
Yeah.
are actually committing legitimate mortgage fraud.
Mhm.
But what you could do is when you get to that 20% equity threshold,
Mhm.
some clients that we've worked with have refinanced
Mm.
into an investment loan from a second home loan. So now
Mhm.
they freed up that slot again to do
Mm.
a second home loan, but not simultaneous to the first home loan or
And
first second
has
home loan.
the strictness on that changed? Because I feel like in the past I've heard other podcasts and episodes where, obviously lender specific, but
So it's been the same since the 2007, 2008 crash.
Mhm.
Will a lender specifically shut you down for it and say, hey, Josh, you can't get a second home loan? The truthful answer to that is if you go back to the same lender that you did the first second home loan with, because
Mhm.
it's going to be documented with underwriting. And
Gotcha.
within that originator's system and within the underwriting system, if
Mhm.
you go to a second lender to do a second home loan,
Mhm.
um, it might not be caught or flagged depending on the diligence done by that underwriting team,
Gotcha.
um, because everything that's originated is recorded and basically put on record with Fannie and Freddie, and they can see all of that. So
Mhm.
if they do their due diligence, then it would be the same with every lender. But
Mhm.
there are some that, there is a human aspect to originating loans and underwriting, and errors
Mhm.
happen, right?
For sure. And there was a question on this. So one says, "What does it mean 1 second home at a time or 1 second home at a time?" Yeah. All right.
Yeah. Yep.
You wanna take that one? I mean, that's basically what he said, is that you can't have more than one 10% down second home loan.
Right.
Um,
Right.
Now, I guess just wondering,
Yeah.
could then my wife take out
Yeah.
a second
All
home?
day. Yep. All day. Because technically for her, that could be the second home,
Mhm.
right? Because they're only going to count the 10 properties, right, or the one property against that one individual on the mortgage itself.
Hey, I hope you enjoyed that clip. If you would like to see the full episode, I have linked it down below. And don't forget to like and subscribe, and I'll see you in the full video.